And we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through the markets one step at a time, top-down analysis style, breaking down the charts, the news, the market information, anything we find important, relevant, and interesting, bring it to you guys as a show here on our YouTube channel. And welcome back. If you're a veteran of our community, you know what I'm going to ask for right now. Hashtag Team Tackle right in the chat. Let's get the conversation started the way that we always do here on YouTube in a positive and energetic way. And if you're brand new to the channel, never joined us before, make sure you click that subscribe button, click the bell, come back and join us. We go live every day, 12:30 Eastern, on whenever the markets are live. Let's bring the coaches in one at a time. We got Coach Emily here to join us again for her regular Tuesday appearance. We're going to be holding another round of the Queen's Court a little bit later in the show. Coach Matt and Coach Mark as well. Matt, how are you doing today, sir?
Doing good, Tim. Excited to be here with Coach M, yourself, and Mark to break down the market activity here today. Market firing off a little bit, but open question. Really haven't seen a change of pattern yet. Going to be interesting to see if we can break out of that 9 EMA, but we'll discuss here in a moment.
You know, day at a time is trying to form some support down here, but it has not changed pattern or trend in the short term yet. We'll break down all those charts and technicals here in just a minute. Mark, pleasantries first, though. How are you doing today, sir?
Dude, listen, Matt just summed it up. I'm encouraged in the sense that, a lot of preferred areas are not doing too shabby. But man, whether it is Kathy Wood's ARC or the S&P or the NASDAQ, you haven't got a pattern change, right? You haven't, and we've seen this song and dance before for the last few weeks. The innovation type companies definitely been out of favor. Obviously, that chart has been breaking below support and developing into a downtrend. The NASDAQ is pushing towards that 200. It feels inevitable. S&P trying to find some support. But before we go too far down that path, Emily, Coach M from the Dynasty Investors Trading Lab, pleasantries first as always. How are you doing today?
I am doing wonderful. But you know what else hasn't changed pattern besides the S&P in the market? My fantasy football. I'm 0-4.
I can't say much.
I don't know. I'm at a loss for words. I have no idea what's going on with my fantasy football this year, but I need that to change pattern too.
Listen, between me and M's fantasy football teams, we have the exact same win total as the Miami Dolphins.
For 1 week, though, I'm glad Emily did not change pattern. I played her last week, and I did win that game narrowly. It was definitely a hard-fought game, and I played Mark in the other league and beat him as well. So my pattern is trending up in fantasy football, Emily, doing a little bit of scoreboarding here on a Tuesday, playing Tuesday morning quarterback. But let's get right.
I was rooting for you into Queen's Court today, and now you're trash talking against both of us. I'm going to go find a sword.
That's an interesting way to butter up to the Queen. Hey, how'd you like that?
No sympathy at all. Zero.
He does it to himself. He does it to
himself.
Listen, I got my sharpening stone out. I'm ready. Whatever you are.
Hey, listen, you can have a sharp weapon. I'm going to go find a blunt instrument.
That will work too. It was
some anger right there, buddy.
We will see when it comes to Queen's Court. And I do get myself floated quite often. But if I'm going to talk trash, it's going to be in the first 2 minutes here, Emily. Hopefully we can bring it all the way back around by the time we get to the court a little bit later in the show. Matt, let's get right down to business, though. Support is trying to develop here. You got a green candle on Friday, red candle on Monday, got a green candle on Friday. It's been a back and forth here for the last 4 candles. What is your read on the S&P 500 here?
Man, it's if you're betting on the pattern continuing, you certainly won today. You're having a little bit of an up down, similar volatility in the marketplace. We did break this down yesterday in depth from a technical perspective in the halftime show. So if you want to look at that in-depth technical analysis, check out yesterday's halftime report. But just very clearly, we're looking at this support level right here between 4240 and 4260. You see the wick starting to come in. I talked about the slowing momentum in wick analysis. The question now is, support is forming. It's forming at a historically known level of support. Can we get that pattern change? Can we ultimately get that intraday analysis to break out of that 9 EMA? I think it's important. You see this as a market that is slowing its momentum and trend. You're seeing it come at a support level. It's happening in an environment where don't get me wrong, the political environment is crazy right now, but at least you're starting to see past to where some of this wall, the proverbial wall of worry, starts to dissipate a little bit over time. Even earlier, late last night, we got word that there is more paths for budget reconciliation, the budget resolutions, and the debt ceiling than what we previously thought with the Senate rulings yesterday. And so you are starting to see a little bit of a path to recover analysis. But again, I come back to this as I do have this as a technically driven market without a theme right now. And when you're looking at that up, down, up, down, up, down nature of the market over the last 4 trading sessions, number one, you're seeing support come in. That's certainly a positive thing. Number two, you got to love the upward movement in price here today, because if you didn't get it, the result is a massive downward movement in price. That's what you get in moments of volatility. You got to like that. You got to like the fact that on an intraday level, again, speaking to the bull side here, on an intraday perspective, yesterday when we were breaking down the intraday chart, we identified that 4260 level ultimately as this top end of the support range. We talked about that that level yesterday and the importance of that level. Well, later on, you got that double bottom there and you start building into the strength. But before that daily chart gets consistent, you need to see some degree of higher highs, higher lows from an intraday perspective. And I'll just go back in time just as a little bit of a case study. And let's take a look at energy very quickly. And I just want to highlight what I'm talking about from on the S&P. When you're looking at this intraday build here, it first started with that double bottom. Right? So you have that double bottom. Look at the volatility here. You have that slowing momentum on a chart from a charting perspective. You see that double top right there from an intraday. You break out. And then following that consistency in technical analysis, what established following that is a very consistent series of higher highs, higher lows. And when you look at that on a daily chart, you're like, oh, that was sexy, sexy, sexy. Well, yeah, or these last couple days here. Well, yeah, but it started with that double bottom analysis right there. It started with that breakout right there. And then you saw the consistency on that daily chart. And so when I come back down to the S&P 500 here, and I'm looking at this, and I like this support level, number one. I like the upward movement in price, number two. But number three, we've done this song and dance before. We did it literally 2 days ago. We did it yesterday. We did it the day before that. Look at the upward movement in price. We have very key levels of resistance that we're fighting up against. And so if we're going to see a little bit of a bullish type momentum environment, it's in that moment in time where you certainly could see that. No doubt about that. You're kissing against resistance. You're kissing against that daily 90 MA that is coming down. Can we get a breakout of intraday resistance? Can we establish a higher level of support following that breakout? All of those can happen today. It can happen tomorrow. But you're in that moment in time where we're living on charts because these opportunities are real. Right now, we're looking at resistance and we're looking at a potential breakout of resistance that would shift the pattern. Now, what would transpire is you want to, if we do break out of that intraday resistance level, reclaim that 9 EMA, you wouldn't just simply go back to the, oh man, let's open up those risk graphs and let's let it fly type scenarios. No. This is like, okay, I just got to the hotel. I just went out to the swimming pool, and I'm like, man, it looks cold out there, Em. That looks way cold out there. I'm just going to dip my toe in a little bit, right? You start dipping your toe in a little bit and you add to the position size over time as the analysis starts build from a consistency perspective. But again, it starts with bottoming analysis, and right now you're at a moment in time where you could see a breakout on an intraday perspective in the S&P, and that certainly could drive up into that 4,400 level. And ultimately, the battle that shifts the trend happens at the downward moving 20 SMA. But for right now, the momentum trigger right now is that 90 MA. That's a precursor to a reversal. Let's see us break that first.
Marky, in the pre-production, we were talking a little bit about that Senate parliamentarian, kind of hinting at different paths to budget reconciliation as well as 3.5 trillion. Matt just mentioned that there may be some of those paths. And can you kind of give us that news? What did we learn in the last 24 hours? I saw Chuck Schumer commenting about trying to get something done this week. What do we know so far?
Well, the worst case for the markets, because Janet Yellen would be up there and talking about how the entire infrastructure of the United States is about to collapse, and we're going to all die horrible, hideous deaths. So that, but the market is so focused on the debt ceiling right now that it does look like we have additional paths to raise it. Well, the Democrats have additional paths to raise it without having to tie it to this larger debated bill. The Senate parliamentarian ruling that through certain procedural moves, the Democrats can raise the debt ceiling perhaps without having to make it part of this bigger package. And the worry was because there's no way they're going to get the larger infrastructure package passed in the next 2 weeks, right? They go on break next week. They have a few days this week. The two sides, talking, and I'm talking about the progressives and the moderates of the Democratic Party. While they're talking, I mean, that's a big bill, and there's a lot of ground to cover. So that's not going to happen before this well, I don't even know if it's arbitrary, but this October 18th deadline that is being discussed, where there's real problems within the system, with the plumbing of the system, where default and all that. And so it looks like they're passed just to raise the debt ceiling. Independently of that, Chuck Schumer has said that we're going to get this done. Now, do they get it done? Can they get it done? I mean, we don't, there is that hypothetical. They always end up doing it. And so I think you have a day in the future where they're announcing they're close, or they're bringing it to the floor and then going through all the procedural things. And I could bore you with vote-a-rama stuff, but here where, it's going to be a long multi-day process. So we're not out of the woods yet, but there are steps of progress being made to take that wall of worry out of the wall.
Yeah, and I do think this is important information given the fact that last week we as market participants, we were working under the presumption that there was one path towards the debt ceiling, and it was either going to be somehow get some Republican support for an increase on the debt ceiling, or two, use budget reconciliation for the debt ceiling and thus not get the $3.5 trillion, I don't Build Back Better plan. Is the Build Back Better plan, is that the combination of both plans? I think it is.
I think so.
I think it is. So I'm talking specifically about the 3.5 trillion non-infrastructure. I just call it non-infrastructure because it's traditionally not infrastructure. And so that's how I separate them in my mind. One is a 1.2 trillion infrastructure deal. The other one is a 3.5 trillion proposed non-infrastructure deal, we'll call it for right now. But as of last week, there was this one path, singular, right? Democrats had a choice. And that's where there was a lot of concern regarding that wall of worry, because it's like, well, which one are they going to pick? Which one are they going to pick? Well, now that we're starting to see a little bit more ability for the Democrats to thread the needle here, get both the budget reconciliation done with also increasing the debt ceiling through some degree of weird Senate ruling. And I'll be honest with that one, guys. That is a weird Senate ruling where you allow the debt ceiling to get increased through a budget resolution and then combine them through one act of budget reconciliation. I mean, that's a tight rope to walk and a loose interpretation of Senate rules, in my opinion. And quite frankly, again, sorry, putting the political hat on just a little bit, Team Tackle, but a bad precedent, in my opinion, to establish as well. And so it's going to be interesting to see if the Democrats can thread the needle here. But at the end of the day, as a market participant, when you're looking at the wall of worry mark, right, and you have debt ceiling, reconciliation, inflation, Fed monetary policy, like when you look at that wall of worry, the more we start just kind of hammering against that wall of worry, moving things off that wall of worry, the less we have to worry about. So I think it's a positive step for clarity in the marketplace. Can we see them execute that over the next few weeks? I think it's dubious, but at the end of the day, this is a positive step.
Now, why is it when you say build back better plan, I just want to sing, I want my baby back, baby back, baby back.
I want my baby back, baby. Yeah, I do too. Like in Michael Scott's Office voice.
I just want my baby back ribs right now.
First of all, it's the build back better.
That's where you get business done.
You guys are missing a B. It's the build back better budget plan, by the way. There's 4 B's on there, I believe. And so it is.
Is this like a Bed Bath & Beyond versus Best Buy symbol debate?
No, it's the BBBBBY is what we're getting.
Okay, we're off the rails.
We're going off the rails. So we do have some hope that there could be some resolution to it shortly, but we still do not have that resolution yet. Is that basically what
I don't know. It seems like they're making up stuff right now. So we'll see how it ends out. But I do think the mitigation to the wall of worry is kind of the concept that a lot of market participants are working under. And I think the assumption to a certain extent is they're just going to get some of this done now. And especially with the very loose interpretation of Senate rules, I think it does get done. But again, we can debate that as market participants. The more we eliminate from the wall of worry, the more confidence market participants are going to have in buying at lower prices. Or excuse me, I said that wrong. At buying at higher prices.
Mm-hmm. By the way, if the market wall of worry was a real thing, Janet Yellen would be standing on top of it with a megaphone screaming at the top of her lungs.
With a tinfoil hat on at this
point. Holy cow. And, we're heading into a recession. Modern economics has changed. All of this.
I kind of feel like we're in 1968 and we're in the middle of the Cold War and we're debating. It's ridiculous.
Listen, we're one more hyperbolic statement out of Janet Yellen from her saying, and your little dog Toto too.
I just want to remind Janet that it was just 4 years ago you proclaimed that there was never going to be a recession ever again in your lifetime based on modern monetary theory. We've went through one of the largest recessions in human history since then. And for the last 2 weeks, you've done nothing but proclaim that we're in front of the biggest recession in the history of mankind if we don't follow your authority.
Respect my authority.
There you go. All right, moving on. Let's get back on technicals for a minute here, Matt. Outside the S&P, I'm seeing some similar price action from a daily candlestick perspective in some of the other indexes. But what are you seeing across the major indices here
today? Let's just take a quick peek at the rest of the indexes. Dow Jones, again, you're seeing a similar pattern: fire off, come back down, choppy volatility. Gave that analysis yesterday of the 200-day moving average catching up to it over time. And definitely check out the podcast as we discussed that concept of, different tests of the 200-day moving average, whether you're talking about a pandemic volatile test where it's based on news, or when you're talking about just stabilization and long-term fundamentals catching up to that. I like the zone you're looking at in the Dow, but once again, you're kind of kissing up against that nice little resistance zone. Like the horizontal build here, let's start to see some resistance violations in the Dow Jones. When you're looking at the Russell 2000, I still find it fairly impressive, the increases in support in an environment where the S&P and the Dow Jones have done nothing but decrease support. So I find that fairly impressive that the Russell 2000 has found a little bit of legs at support. We're seeing an increasing support, decreasing resistance in the short term, creating a little bit of what we call a symmetrical triangle, which could see a little bit of explosive volatility as it breaks out of the symmetrical triangle, but we're not there yet. We're still, as you can see, if that triangle does kind of last, we still got quite a bit of time there. But again, the key I'm looking at here as we get in, as we attempt to get into these resistance levels between 2300 and 2360, as long as support increases and as long as you're seeing that increase against that 200-day moving average, I think it's a very interesting index. But once again, it's been asleep for about what? This is the 10th consecutive month the Russell 2000 has been asleep. Stay bored. Isn't that what we like to say in cash flow condors, Sam?
Stay bored.
Stay bored.
Hey, this is one pattern we don't want to change at all. Just stay as you are.
Yeah, Emily keeps saying, don't you draw that symmetrical triangle. Don't
Leave it
you
alone.
draw that symmetrical triangle. That is dead neutral. You got a range of 2100 to 2300 and you are doging at 2200. You are dead neutral in the Russell 2000. And it's been a great cash flow environment for cash flow condors. But for us directional nerds out there, we sometimes like to see a little umps, especially in those small and mid cap stocks. So let's continually look at that support level as we build coming into either that downward moving resistance channel, which is now vertical, or the horizontal resistance channel, which is honestly, rock solid of very, like that's cement that came from the United States. That's rock solid cement at that resistance level between 2300 and 2360. But again, like that build as we attempt yet another time where the Russell 2000 disappoints us at resistance. But again, don't take me and Tyler's hope away. But when you're looking at the NASDAQ, obviously this is where a lot of the volatility is currently residing. And whereas when we're talking about the double bottom hypothetically building, and I say hypothetically, Tim, because it takes 3 days to confirm a pivot point. It doesn't take 3 days for traders to take action. It takes 3 trading days for that to confirm a pivot point, in my opinion. And so when you're looking at this from a NASDAQ perspective, you're just seeing this as a downward movement in price, maybe a little bit overextended as the broad market really fights for support. Obviously, the NASDAQ can get a little bit of a catch up as well, but where does that catch up lead into? Well, it leads to the Dow breaking out of resistance. It leads to the S&P fundamentally changing its pattern. But what does it lead to in the NASDAQ? It just leads to a bearish retracement. And so the NASDAQ has some time. It just has some time. And by the way, we haven't even talked about the bond market confirming a bull flag on the 10-year note, punching up against 1.5. And if that continues to increase on the 10-year, it's gonna be very difficult to see the NASDAQ, where you have so much growth concern right now, just pivoting and becoming that historical that we would see 3 weeks from now as a really good buy opportunity. Now, if the 10-year note comes down, right, and if we see some degree of double bottom type analysis that we're seeing in the Dow Jones here, you see the double bottom analysis as the 200-day moving average is catching up. If you're looking at it in the S&P 500 here, you see that double bottom. Look at the 4 consecutive days, down, up, down, up, down, up, really confirming that support level at 4260, which coincides with an old resistance, old support, new support type analysis. Again, you're still looking at this as a downtrend, but you're looking at it a vastly different downtrend than the NASDAQ. Look at your, and again, let me kind of geek out on technicals. Do you mind if I geek out on technicals for a second? Okay, I want you to keep an eye on a couple things here. Number one, look at the momentum of the current movement. All right. Oh, and by the way, later today, I'm gonna do a little video on we're gonna call it Matt's whiteboard, because we don't have a better name for it. It's just me geeking out on whiteboards and painting things. But I'll post it to our Discord channel for the Step System Mastermind group later today. And in that video, I'm going to talk about the 1, 2, 3 technical pattern as tied to Elliott wave. And basically in that, I'm going to talk about momentum, because momentum in trends is a precursor to something larger happening. And so when you're looking at this from a trend, you certainly see this as a downward movement trend. And I can't do this unless I get my Epic pen. It's like my crutch at this point. Okay. I'm sorry. Like, it's just my crutch. I found something, Tackle. I love it. You're just going to have to bear with me as I love this. Now, when you're and then you're going to have to bear with me as I actually learn how to use the thing. I would say that's what you have to bear with me on. When you're looking at that from a downward movement trend, you got that scenario right there. All right. This is what we historically call a wave, right? You're looking at motive wave down, corrective wave up, motive wave down. Well, the next would be corrective wave up. Well, the momentum within a trend is really important to technicians. And when you see this support level start building at a historically known support level, and in the back of that, that also coincides with shifting the momentum of the trend, that typically is a positive first step in reversal analysis. And so when you talk about traditional reversal analysis, I really have 5 points to a traditional reversal. The first point in a traditional reversal is not the double bottom. It's actually the slowing momentum within an overall trend. And so when you're looking at this from an overall trend perspective, you see the market go from 49.50 all the way down to 4,300. Well, that moves a good 250 points to a downward movement in price. We come back up into resistance, and let me get you an actual number there for the resistance pivot. You work yourself back into resistance, and we'll call it 44.60, and it comes down to 42.60. And so that moves 200 points to the downside. And so what happens is you move 250 points and then you move 200 points, and that coincides with the previous known level of support. That's what we call slowing momentum in trend. And slowing momentum is not an indication that the buyers are just going to come in. Remember, it's that first thing that you look at, and you basically start refreshing that bullish watch list is what you try to do. And so you see that as a slowing momentum environment. Well, when I'm looking at the NASDAQ here, and let me go ahead and erase my lines there if you don't mind. If I'm looking at the NASDAQ here, I don't see a decreasing momentum environment that would be the precursor to a reversal type trend. I see a market that has very similar momentum between your pivot points of 15,700. We'll come down to that level, and again, let me get you a little bit of a number there. We'll get to that number right there around that. We'll call it the 14,900 level. And so you drive downward movement in price right around 800 points. And then you go from 15,400 to 14,400, and you drive down even more points. And so in the current momentum, you actually have increasing bearish momentum within the trend in the NASDAQ. You couple that with you're not really at a known support level. You look at the 10-year note, which is the concern for the growth, and that's actually punching up against the 1.5, which if we break out of that, more concern will happen in the growth areas of the market. So the upward movement in price I'm seeing in the NASDAQ, which actually is relatively strength against the rest of the market, I think it's a little bit of a misnomer. I think it's a little bit of a misread here, given the fact that the actual trend has more bearish momentum in the trend right now than any other index that we're reading out there. And you're seeing the upward movement in price more is just tied to the S&P, tied to the overall thirst of the market today. But I'm not seeing this as of right now as a reversal in the NASDAQ.
No, I don't think so either. I mean, if you think about the last 2 days of candlesticks, we had the selling on Monday. Now we're having a little bit of bounce back, but we're still below the 9. And it feels destined to me that it wants to test that 200 in some form, fashion. Time correction, price correction could happen, but we'll have to wait and see that. Mark, anything you want to add to broad technical analysis here?
No, I mean, a bearish stop out, but Matt's breakdown of technical analysis, everyone should learn how to do it on that level. Feels like a reprieve day for me, right? In tech. In tech, the S&P pattern looks more encouraging. Tech feels like a reprieve day.
By the way, Matt's whiteboard is a wonderful name. We don't need a more creative name. I love Matt's whiteboard.
Listen, we got Jedi options, and I get Matt's whiteboard. I get the most boring name in the history of mankind, Matt. It's like one of the most common names in the history of it. Like, it's not descriptive of anything. And then a whiteboard, Matt's whiteboard. We got Jedi options. Me and Frank gets Frank's charts and Matt's whiteboard. Like, what are we doing?
Why not? Fresh and clean.
Maybe.
Why not?
Marquise in the chat did say that your epic pen is like Thor's hammer, so you got that going for you.
Marquise, I love you so much. I love you so much. That's right. My epic pen is Thor's hammer, 100%. In fact, we're just going to call my Matt's whiteboard Thor's hammer.
Absolutely. I like that as well. And by the way, the Epic Pen is well received by me and everybody else in the audience. I think it's wonderful that you can draw the way you do.
Well, I love the visualization of technical analysis. I love painting that story, and just, Epic Pen is such a good little tool.
Paints a
Epic
picture.
Pen, Tackle Trading, halftime report brought to you by Epic Pen, who doesn't pay us any money.
At least give us a free pen. All right, let's keep flashing through the markets here if we can, Matt. Anything in the sectors grab your attention? We did a thorough breakdown yesterday, obviously, but energy looked like it was up a little bit this morning. Then it kind of gave a little bit of it back. Any of the sectors that did grab your attention here today?
Not really. I just see a little bit of a continuation to the analysis that we did, very detailed in sector analysis yesterday. So I really don't have anything really to update here from a sector. Obviously, finance, a break of 39, certainly going to be interesting. But honestly, the two sectors that are most interesting to me right now are sectors that typically right now probably are not very highly rated at tackle trading, and they're not very discussed by market participants. And they're both tied to what I perceive as a potential theme developing post all the political nonsense, and that's infrastructure. And so I'm looking at bottom analysis in basic materials right now. I'm very interested in seeing that 79 support level really kind of hold right there in that 200-day moving average. I like the industrial index right now. I know there's some pain in the industrial index, but you don't get moments of value opportunity when everybody's making money. That's not how value works. And so I kind of like this test of the 200-day moving average for the first time in quite some time in the industrial index. You're seeing a little bit of a double bottom in the Dow Jones, very similar to that. And Mark, I want to get your take on this. Obviously we're going through political talking head moment in September and October, but could you see a theme developing if we do navigate the next 2 to 3 weeks appropriately from a political perspective, meaning we don't threaten the faith and credit of the United States from a debt ceiling perspective, and the Democrats, let's say, get somewhere around 2 trillion, because I still think this is a massive negotiation by within the Democratic Party. Let's say they get somewhere around that $2 trillion mark from a budget reconciliation. Obviously, that means the Congress passes the $1.2 trillion infrastructure plan as well. Could you see a theme developing if we do get these wall of worry items affirmed from a positive moving forward perspective? Could you see a theme developing out of that?
I mean, if you get the 1, 2, 3 punch.
Now, again, 1, debt ceiling does not implode. 2, 1.2 trillion infrastructure is passed. And 3, the Democrats get, we'll say, 2 trillion.
You have to have earnings on the back of that, like in order to create, because so much of this year has been earnings growth. Like whenever the market's had any worry, right? Whenever I've had, but this macro and this the market's been like, well, we'll look at earnings. We're awesome. Yeah. Screw all that. You got to have earnings season on it. Now, could it stabilize and create like a nice cash flow stable where you're not like worried about support levels collapsing every day? Yes, that would happen almost assuredly, and you'd probably have some upward movement, create some nice cash flow, create some nice short-term trades. Got to have earnings though to sustain this one. It's been the fuel of the market this year, and we are just a couple weeks away, right?
Well, we're a couple weeks away, but we're Pepsi today.
I saw the big one.
And Pepsi was an interesting report. Obviously, not that. I don't think the market's going to take any macro market type themes on Pepsi's earnings report here today, but it does bring to the forefront the importance of earnings season, because I agree with Mark. The media all over our news feeds at Tackle Trading, obviously, what most people are talking about from a market participant perspective is those major big ticket items, right? Because those major guys, it's not every year we debate $2 trillion in additional spending. It's not every year we're debating a $1.2 trillion infrastructure plan. I mean, my goodness, Tim, how long have I been calling for an infrastructure plan?
Better part of a decade.
Let's just go 3 presidents ago.
Yeah.
Okay, that's what we'll start with. 3 United States presidents ago, I've been calling the United States infrastructure subpar against their counterparts. And it
I
is
think I know when it
subpar.
was, Matt. It's the first time you landed in LAX, I believe.
No, no, it was the first time I landed in LaGuardia.
There you go. One of those two, right?
Or O'Hare.
Yeah.
And then I went to LAX and I'm like, seriously?
We need better airports. Let's go.
People come through these? Like, no, I kid. No, I don't. LaGuardia is terrible. Fix that airport. But the point remains, though, when you do travel a lot, you do get a very, very, very 64,000 foot viewpoint of the infrastructure. And when you travel around the world, you see some infrastructure that is far vastly superior to what we have in the United States. And I just want, and the infrastructure for me isn't, hey, I want to drive on a nice road, guys. It's for all of our trucking companies and our storage facilities, and to be more effective and more efficient in their business revenue models as well. So it's more about just the US in general. And so obviously everybody's going to be talking about that right now. But for me, Mark, I do think we're going to see some positive, and when I mean positive, I mean end of the world scenarios don't occur here, right? But for me, nothing will matter what happens politically if we do not see a positive, awesome earnings season. That for me is the thing that this market really is waiting on. I think they're waiting on that start of earnings season to see the very important metrics of guidance for 2022. And when you're looking at that guidance, and again, it's just Pepsi, and it's just one company today, but Pepsi comes out at $1.79. They come out with an expectation of $1.73. Revenue beat the expectation at 20.3 versus 19.3 billion. And they affirmed EPS guidance for 2022 and raised revenue guidance. And so they did that little, hey, we're maintenance mode on EPS. We're going to slightly raise the revenue guidance. You could put it into the trickeration to a certain extent with what Pepsi did today. But once again, at least we saw that increasing in guidance to a certain extent. Obviously, Pepsi at 150, I think people are going to be interested in here at Pepsi at 150, especially when you take a look at that weekly chart. Look at that weekly chart. Look at the beauty of that support level at 150. Look at the support level build. You got to like that now, your post earnings. I think people are going to be interested in Pepsi from a cash flow, from a position style perspective. But again, why are we interested? The combination of technicals, but not because, oh my goodness, did you see the political news? We're going to, they get to pass the debt ceiling. No, we like Pepsi because they just passed earnings. And so it's earnings that is so tight against the corner right now. Man, you can see a lot of scenarios happening over the next 2 to 3 weeks. But I'm going to tell you, one of the scenarios that I got in the back of my mind that I just feel represents a certain degree of opportunity is in the moment of October, where we're dealing with a tremendous amount of uncertainty and a tremendous amount of volatility coming out of a difficult September. Man, it's hard to see much when you got so many dark clouds politically and economically. But as that wall of worry dissipates, again, let's say we get the debt ceiling passed. It does look like the Democrats have a path to get that done. Let's say they get the $2 trillion. If they get the debt ceiling, man, they're going to get 2 trillion, guys. In my opinion, they are. I don't think they get the 3.5, but I do think they get somewhere around that 2 trillion. That obviously means they get a $1.2 trillion infrastructure bill passed as well. On the backs of that, you go through earnings season, and this is just my expectations, but I expect a top 5 earnings season of all time here. As we get further removed from these current moments in time, can't you see a scenario play out where themes start developing in November and December?
Yeah.
I can
absolutely.
too.
Yeah,
I can
100%.
too.
In fact, mapping that out in my head, Matt, that's exactly where I'm at. And one of the reasons why I've been talking about opportunity in the fourth quarter so much, I know there's a little anxiety, the wall of worry Mark talks about, that's out there in the marketplaces. And in the short term, it's definitely there. But I'm a firm believer that some of this stuff will work itself out through the month of October. We'll get clarity on these charts, and then it's going to be a lot easier to approach some technical entry points and whatnot.
Yeah, so you're seeing, and what's interesting to me is you're starting earnings season, and again, this starts next week, but you're starting earnings season not at a high point, you're starting earnings season at a low point. The expectations for market, I think, is a little bit less than it has been in the recent 2 quarters. It's been a difficult month of September, but I do think greener pastures are in front of us.
I agree. And Pepsi, a nice little earnings report. Nothing blowing out the doors, but they beat, and they raised the guidance. So that was a good start here. Not a lot going on this week. Next week, we will get bank earnings. By the way, you highlighted.
Listen, if there were 5 earnings reports today and I had some beautiful, Pepsi would have got the trickeration commentary. But again, it was one. So
yeah, and it's Pepsi. All right, and by the way, that weekly chart is in a good zone for longer term investors if they're interested. I think there's something that could be there. Let's keep moving on here. Next, if we can, let's move through the commodity market. Matt, crude oil has been the story of the month. Gold is kind of stuck in the middle. Crude continues its run. It broke out yesterday. Here we are today. We're extending that. What did you read here on crude oil?
Breakout was definitely legit. You had a high base coming into it. You had current strength and momentum in trend coming into that 75 to 77 breakout. You broke out on positive catalyst with OPEC news yesterday, and you saw some continuation here today. Honestly, technically, I don't know what to dislike here.
Yeah, Marky.
The only question is historically, where could it go? I would say is the open question. And we always talk about those Goldman Sachs, Bank of America, Wells Fargo, those banks and where they think crude can go, Mark. And typically, where do they say crude's going to go?
They always pick, nobody ever picks 93.46, right? It's like 90, 100. Like I want to see JP Morgan come out. We think 94 and 32 cents, but they pick nice whole round numbers.
They do. They pick nice round whole numbers. In terms of those numbers, obviously, historically, that's how we're going to be driven. 110 is kind of top shelf resistance level. 100 is one of those significant whole numbers, but you'd be surprised. We don't have a lot of evidence with crude at $100, guys. So
no, but I'm going to say something just from a chart perspective. If we were forget the underlying asset, if we were looking at this chart, some ambitious position traders would be eyeing that resistance level or close there too.
I think you got a couple interesting resistance levels, Mark, but the one I would look at in terms of the weekly chart is right here. And I know it's kind of hard to see in that chop, right? It's hard to see in the chop, but you see the resistance here? Support, a lot of chop resistance support there, a lot of support there. I got that, and because I got that, I'll give you 87.01. That's my whole number. I would say 87, and then the resistance levels again. I'd go 87, 92, 30, 100, just because it's a significant whole number, and then you start getting into the 107 by 110 level, and so. The thing about it is, though, and this is why people are excited about it, there's not a lot between the 75 break and the 87 level of resistance. And so whether it's 87, 90, or 100, man, we'll geek out and debate that, but that's really good for every energy trader, every crude trader, whether it's 87 or 90. I could care less. I just like the breakout.
Listen, all I know is that oil bears better come up with a new Delta variant to scare the oil market, like the Wu.
They tried that. It didn't work.
Yeah, the Mu variant didn't work. There's no case in it, and we need the Wu Clang variant, or something like that.
Are you looking for a Wu-Tang clan joke here?
Like,
what is going on here?
I was trying. It wasn't there. I wasn't prepared for it.
Maybe anyways, don't start with the Wu-Tang clan joke. Like I'm a big fan of the Wu-Tang.
Hey, listen, all I know is that if you don't have any oil exposure right now, you need to re-examine.
Frank just cried his first tear of his life based on your Wu-Tang joke.
Listen, you give me Spice Girls and I will do it.
Oh yeah, he nails the Spice Girls.
You give me Backstreet Boys, I'll do it. But you give me
Hold on, we all need to be clear on something. Yesterday he calls me out for Spice Girls when all I'm trying to do is give the people what they want. That's the Epic Pen. right?
Uh-huh.
All of a sudden, all of a sudden,
Uh-huh.
like he nails that. He's like, hey, that was Stormy Spice. That was Scary Spice. I don't even know
There's
what their
no
names are.
Stormy Spice.
I don't know what their names are. Scary Spice.
Emily
Isn't it like
float
the
these
Seven
people.
Dwarfs?
No Stormy Spice. You're Stormy Spice.
By the way, if you've never
I
heard the
think I
Wu-Tang
proved
Clan,
I'm not a Spice Girls.
if you want an awesome
Can we
intro,
just prove who the Spice Girls fan is, though? Is that
Mark is the Spice
Oh,
Girls.
thank
Yeah,
you.
no
Okay.
argument there.
Are
No
we
Okay.
kidding? He started
okay.
singing it yesterday off the cuff out of nowhere. He knew every
Okay.
lyric through 2 different verses. So
And-
yes,
and-
Mark
and
is the
let's get
Spice
it.
Girls
We
fan.
got
Yes.
Scary, Sporty, Baby, Ginger, and Posh.
And there's a new Stormy Spice.
So there's
you know?
a Stormy Spice.
There is not a Stormy, and Posh is married to David Beckham, of course. Everyone knows that. That is, you know.
Can we not say everybody knows that?
Wu-Tang Clan NPR Tiny Desk Concert 20 minutes. If you ever want an introduction to that band, it is a wonderful 20 minutes of music. There's no question about it. And those Tiny Desk concerts, if you guys have not seen them, they're awesome as well.
The
all right.
Wu-Tang's watching the halftime report saying, keep talking, Chuck.
That's right. Let's go.
Keep
Let's
talking.
go. Let's do it.
Keep talking.
Let's move on. Gold next here if we can. Gold looks like it's bumping.
Choppy
It's
mess.
a choppy mess.
Choppy mess.
Anything else you
Nah.
want to know? Bitcoin, last one on Skyline. Then obviously development, very, very healthy development. Nice little move here today. Now we're pushing 50K, Matt, but the resistance is a huge zone here. We had the one candle pop above it. Where are we watching?
Yeah. Okay. We're watching the zone of 50K, but I don't yet know exactly where that specific number is. And I think it could be 58.60. I don't know. I think we need more time up here. Remember what I called yesterday. I said, I like it, but I like it with a high base, right? I get left behind, guys. V-shaped recovery, if it doesn't give me a 1, 2, 3 punch, like I think a lot of technicians get left behind there because it just becomes some momentum in and of itself, right? And it goes past pure technical systems. And so as a technician, when something just takes on a momentum beyond what is reasonable for traders, at least for a technician, then they're just going to be left behind, right? And you take that, you understand, you get left behind a lot. You're fine with it, right? Our philosophy as technicians is if you miss the breakout, wait for the retracement. It's fine. Patience is a position. And so I think it's okay to call what you want. And I want a high base. That's what I would love to see develop here. And I do think the price action today, you look at the big upward movement in price, smaller upward movement in price, smaller upward movement in price, could lead to a high base, but we're not there yet. I still see this as a day trading environment once we start formulating the high base, which will end that day trading environment. At that point, I think you'll have a much better, much clearer picture regarding where exactly that resistance channel is. And I would love just to say it was 50K and let's run. But there's a couple wickety wick nonsense at 5,800, and there's a wick nonsense at 51,330, and there's wickety volatility nonsense all the way between 53,000 and 50,000, and so there isn't a specific number yet that I feel like we need to track. I think it's the zone around 50,000, and I think that picture gets a lot more clear as we get more time in the current momentum of Bitcoin.
Mark, what about you on crypto? Are you looking to add exposure here in this space? I mean, this is obviously an area you trade through the secondary type of assets, the micro strategies, those types. Do you love this price action to the upside? How are you approaching it?
I do it with my cash flow Vikings and Skull to all Vikings out there. We do a little practice.
Is this a thing?
It is a thing.
Oh, it's a thing.
100%.
Is this a thing?
100%.
Yes.
100%.
Is this the thing? Because I started seeing it in Discord yesterday.
No,
So you guys call yourself Skull?
no, that's a greedy.
That's the rallying cry.
Oh, Skull. Okay.
Yeah.
So okay.
It's like,
Okay. Is that like
listen, Stormy
more?
Spice, go watch
Like
Vikings
more?
on Hulu.
More? I will for you. I will. It doesn't take much to get me to watch a Viking
Yeah,
show.
but
So
I'm not sure you can be a Viking if you're a Spice Girls fan. I'm just going to point
listen,
that out and leave it
listen.
there.
The man is well diversified.
All right.
The man equally loves Verizon and like the latest SPAC that nobody's ever heard about. Like he can go Spice Girls and Vikings.
Fair enough. Fair enough. Just taking a shot there, but anyway, go ahead with your
It
your
worked.
thoughts, Marky.
Like I
Glancing
said,
blow.
blunt instrument ready in a couple of minutes. No, but
Finish
like
your thought, Chucky.
like a lot of the proxies, and it's understanding because it's a unique dynamic world that when ARK sells off or when the Qs sell off and tech's getting heavy, they will, even as Bitcoin's climbing, they'll get caught in the algorithmic patterns. And so with Bitcoin climbing, I thought there was some opportunities. I added some directional exposure in HUT, which I think has a beautiful little pattern, like this little company. It took off a little today. I thought it had a little cleaner entry yesterday. So you look for a pullback, a secondary pattern. I thought the interest is, and then Mara, who is my favorite Bitcoin proxy outside of Coinbase. And I like the little signal that it is generating today. It has some catch up. Like Mara, for months and months and months, traded with Bitcoin essentially. Really high correlation, but got caught up. I mean, there's been a lot of negativity on tech, right, and a lot of negativity on Kathy Woods, and that is it's like caught. I think there's some catch up.
I kind of like the zone.
I like the zone and I like the catch up. I like the catch up ability, and so I added some exposure in Mara directionally. And then you look, we get an oversized move, take profits, rinse and repeat, all the things that traders do.
I like both technicals behind them, but the one on Mara does got me interested a little bit more from because there's a lot of
you broke a trend line there, right?
Well, there's a lot of aggressive short-term tradable instruments for crypto. Right, you literally can just go do crypto. You can do the futures market. You can swing trade. There's a lot of ways to approach aggressiveness in the short-term day trading, swing trading. Here's a company, Mara, that's really kind of more of kind of hugging that 200-day moving average. You just confirmed off that 200-day moving average. And when I'm looking at Mara here, and again, this just kind of piqued my interest. The last time we got into the zone, it does feel like there's a buyer's philosophy at that 200-day moving average that has been proven out. Now you're looking at it today and you're saying, okay, I like the bounce, but now that we've reclaimed the moving averages, and not just one of them, Mark, but a cluster of all of them right there, kind of in that same type of pinch that we saw. And I'm going to have to go in a little tighter to show you the pinch, but you see that pinch of the 9, the 50, and the 20 all right there. You're reclaiming that as well. I kind of like the viewpoint here, Chucky, on Mara.
And you know why? Because I ran this a little bit yesterday.
Oh,
and
it was you.
You know why Mara is going to go up to like 45? Because I'm covered at 38 on weeklies. So that,
of course, that's how it always works.
So that guarantees it's going to have this oversized game because I'm covered at 38. So
you can buy them back.
And by the way, Team Tackle, whenever you have something get pulled from you, realize we complain about the exact same thing all the time.
But it's a good problem to have. If you get called out, you obviously hit a profit on the trade. But it is a natural trader complaint. There's no doubt about it.
Yeah, psychologically, we all got to think the market thinks of us as precious little snowflakes.
It's all about us, right?
Instead of just a mathematical equation of 6 billion.
That's right. That's exactly right. It's all about math, all about numbers. All right. Interesting action in the, crypto space, obviously down there. Let's keep moving through the market. Let's move into stock talk next. Got a couple items I did want to cover. Then we're going to play another round of the Queen's Court. I know Coach Matt, Mark, and myself, we all got picks to bring to the table. See if we can please the Queen here today. We'll do that here in just a few minutes. But while we are making the transition, Matt, you did mention the podcast. I do want people to go and listen to the podcast for certain. And definitely, here's the thing, I did a session yesterday with the coaches, students, the coaching mastermind groups on Start With Why. And we had a podcast on Start With Why yesterday where I went through some of my thoughts and the reason why I think starting the fourth quarter is a good thing to revisit your goals, revisit your why statements, revisit your vision statements. If you've not had a chance to do it yet, go and listen to this podcast. And in the podcast post, there's actually a link to the video that I did a couple of years ago. Matt, just talk about this one a little bit. You and I were there yesterday. We had a good conversation. I enjoyed it. Thoughts on the podcast real quick?
A couple things. Number one, really enjoyed the discussion you and I had. And Tim, we didn't talk about the Facebook stuff very much, but we did at the very end and kind of laid our thoughts out to there. And I thoroughly enjoyed your perspective on that as well. But we don't talk a lot about mindset. like in a halftime report or in the coaches shows, or we do in mastermind groups, we do in mind of a trader webinars, we do in concept videos. But I do think sometimes as traders we have a tendency to geek out on technical analysis and option theory, and we like to get into our theory crafting on options and so on and so forth, or certain amount of pairs trades or creative option systems and whatnot. We like to put that knowledge to work to a certain extent. But I think in the back of our minds, all of us understand that having the proper mindset is more important, quite frankly, than any of that. And you did a video a couple of years back, about 7 years now, called Start With Why, where you took the concept of Simon Sinek's great book, Start With Why, and you applied it to the concept of trading and detailed what type of traders you are, different types of systems. A couple of years ago, you took that same concept and you did it more from a visual perspective, because it was fresh and clean on your whiteboard, bro.
That's right. Yeah.
But Christian's fresh and clean is a little bit different standard there. And so a couple of years ago, you had an opportunity to record a nice little video regarding the Start With Why concept, applying it to the different types of traders, different systems of trading, understanding portfolio design. And even though I would categorize this as a mindset type content video or concept type video, I just think you just did such a beautiful job of taking the why, applying it to very relevant and important information for active traders. And so if you have not had a chance, Team Tackle, to review the Start With Why concept that Tim detailed in the coaching mastermind group last night, obviously he did a wonderful job in the podcast, kind of talking to the audience about it as well. And so let's go show Coach Tim some love. He takes a little heat from me and Mark a little bit. So let's go show Coach Tim some love and give him his just due on putting out these amazing content for our community, Tim. So thank you for that.
I appreciate that. And by the way, in my personal opinion, and here's the reality, just as a coach, I mean, you're going to win and lose on individual trades. You're going to win and lose on individual weeks. I don't care what systems you run. You'll win and lose on individual months or even quarters in the market, given a long enough timeline. You got to have a drive as to why you're a trader in the first place, that's outside of all of the mechanics of trading, to keep propelling you forward, even in the face of these walls of worry and anxiety that pop up, because trading is one of the most amazing things in the world. Give the podcast a listen, keep an open mind around it, watch that video. Well, I think you'll get a lot out of it.
Can I just say one thing? Mm-hmm. Tim, your Start With Why allows you honestly not to get beat up in these environments. So you don't miss out on the next environment.
That's right. Yeah, that's exactly right.
Trading, again, we think short term, but it is a long term game we play.
Yeah, I agree.
Yes, it is. Tim, for that, I will only beat you 4 times with my club instead of the 7.
You're so nice.
Enough to get
you're
me
so
bloody.
Nice.
Can I listen to the Spice Girls while you're doing it as well?
Oh, I'm not giving you
why
that
would
pleasure.
you give your torturer more
I'm not giving you that pleasure.
Oh, goodness.
Say la vie. All right, let's have a couple of quick stock stories, and then we're going to play Queen's Court.
While I do that.
Dude, why would you give Tim his pleasure?
Moving on. Facebook, if we can, we brought it up yesterday. I just want to get an updated technical read here, Matt. Obviously, the whistleblowers on the hill here, they're going to continue to be in focus. This is one of the companies that dragged the communications sector down yesterday. It's a complete stay away from me for a long time, Matt. News continues to stay negative.
Facebook's going to get the Boeing treatment from me. There's no doubt about that. Yeah. Well, what are we talking about? Facebook's got the Boeing treatment for me for the last 8 years. No, I don't have an update from a technical perspective. This is an overextended bounce that hasn't even violated resistance.
Yeah. I'm not going to get swept up into the data.
It's just hard for me. As long as it is below the 9, whether it's the broad market or Facebook, man, I have just seen like those short-term moving average. I mean, Las Vegas Sands is one of many recent examples. Like it just, don't try to guess where that thing ends, because like don't try to guess where that 920 falling. Let it form the support line. Like if you wanted to get interested in Las Vegas Sands, look at that support, and then you get it, man, because you never know. You just never know.
Listen, the way I see the 9 EMA is that's the algorithms.
Yep,
The 9
100%.
EMA represents the algorithms, and until the algorithms are on your team, you don't fight against them.
No,
Like,
you
you're
do
not
not.
Terminator.
That's right. That's right. I agree. I agree with that. All right. And then just one or two last ones here, Matt. Netflix caught an upgrade on the backs of, some recent popularity among some of the releases they've had. Got a
Squid
beautiful
Game
technical.
popularity.
Yeah. Yeah. That's basically what the analysts cited. A lot of people driving towards that content, original content, more users, all that kind of stuff breaking out. And it's a beautiful technical read here, Matt. Anything on that Netflix breakout that's catching your eye?
No, I mean, continuation, Netflix breakout. It's hugging the 9 on the weekly chart, but no, this Netflix, the real next Netflix breakout happened on last week.
Listen, I'm gonna go see what they did during Tiger King, and I'm serious about
I
this.
actually like this
You know-
concept, Mark.
You know where I'm at?
I
Because
am.
because every once in a while Netflix has
Start-
this cult. Like, oh my
Eh,
gosh, and Squid Games is it right now.
Are
Like,
you looking for a research? Are you looking for a research topic?
like
Okay,
when Netflix has a cult hit,
it's
what is
not-
the short-term price action?
Okay, but start with House of Cards.
You know?
Okay. I
Like,
would
yeah, I think-
I would love to see the 1 month before a major release, 1 month after a major release for those big time names at Netflix, Chucky. I'm talking like the House of Cards. Obviously, we've seen Squid Game, but we've had a lot of just micro type builds over the course of the last 5-7 years in Netflix as well. I would love that. I would absolutely love that.
I'm just curious if there is a correlation between, because the key is it's original programming.
There is a
right?
correlation to their subscriber count when they release
You know,
major hits, and that's important.
And that original programming is so key for like the
Mhm.
30 years, 40 years from now. I'm just curious. I'll dive into that. subject.
I'm very interested in that. Let us all know at Tackle Trading when you find it.
Absolutely. Yeah, absolutely. Interesting breakout, interesting theme, interesting story. And the long-term charts here point to upward
Oh, man,
appreciation to me, Matt.
And you got some consistency in the weekly charts there. You got to like the long-term viewpoint of Netflix at this point. Now, obviously, earnings, and it's Netflix, and it's Reed Hastings, and that's all I'm going to say.
That's right.
And while if you haven't checked out Squid Games,
Reed,
don't
talk.
don't watch it with your kids. It's not kid friendly.
It's not one of those. It's not.
No,
it
is not a
Don't tell my
kid-friendly-
12-year-old, hey, honey,
No,
let's start something together. Let's start. Squid Game."
No.
Okay.
It is not kid friendly at all.
I
Gotcha.
see. Is it Jeff Bezos friendly? Because he was tweeting about it, even though he hasn't seen it over the weekend, congratulating Netflix on their success. and all
Maybe
that
he
kind of
bought the Netflix breakout.
he might have bought that Netflix
It's a
breakout as
very
well.
very violent dystopian show, but
I'm
so
sure
it's
there's a
not-
reason it's popular.
Okay.
That's it.
I'll drink my watermelon tea as I enjoy that nice little dystopian violent show.
Foam and watermelon tea. I like
Mhm.
it. Outside of that, guys, there's a couple of other upgrades and downgrades, but really probably the one last story I want to talk about here, not from a stock perspective, but give me Johnson & Johnson. It's building on a theme I'm seeing just recently. The Merck news last week, we covered it. I think it's significant what it means towards reopening themes and all that kind of stuff. Johnson & Johnson did submit data to the FDA for their booster shot. It's probably going to get approved here very shortly. Just continued development along these processes. I don't see anything in the chart or the stock here that grabs my attention, Matt, but I thought the news was another step in that direction to where it's like reopening. Okay, COVID, we're getting booster shots and we're getting oral pills and we're getting more treatments and data's going down. I think it does all kind of fit together. All right, that's it. Let's move right into the Queen's Court. This was something we do each and every Tuesday, and the Queen is going to be holding court again for us today. The coaches here at Tackle Trading, we all find a trade or an investment idea, something either swing trade, position trade along those lines. We bring it to the Queen and submit it as our pick of the week, our idea of the week, and then she gets to decide if it's good enough or not. And if it's not, we get our heads chopped off. Queen Emily, where do you want to start here today?
Oh, well, I chopped your head off last week. So let's go with Mark and let's hear what Mark has to say. I'm sure Mark has some very, very interesting stuff that he's been looking at this week. And I kind of have an idea of where he's going to go, but I'd love to hear what he's got to say.
Yeah, I mean, listen, everyone's heard me talk about movie theaters to the point where you probably don't even hear what I say anymore because you're just like, I don't know, Mark's talking on movie theaters. Let me go do the dishes. Let me go do something else. But man, it's a hard press to find a hotter area of the market right now than movie theaters, and with good reasons. Once again, I mean, there was this worry the entire time, and my pick's going to be IMAX, IMAX. There's been so many walls of worry in movie theaters. One, are movie theaters dead? Will people go back to them? And then an even bigger wall of worry, are all of these streaming platforms, are they dead because we're just going to release original content? Well, a few weeks ago, Disney said that they're releasing all theatrical releases directly to theaters, not on Disney Plus. They'll come to Disney Plus later. And then you have just had outstanding numbers. I mean, this is a real genuine shift in not my sentiment, in everyone's sentiment. It's like these stocks are beat up. There's a lot of catch up, and holy cow, are they putting out huge numbers. Venom this last weekend, just amazing numbers. The James Bond new film internationally, which gets debuted this week in America, 110 million worldwide. It's going to be fascinating to what it sees. 1 million catalysts. IMAX itself said it did more business this past weekend than any week in the history in the month of October. Not a strong seasonality month, but what is strong is just the desire. My favorite quote this weekend was, an analyst that says, "I think the premature death of movie theaters is premature." And I think that's the case. And what I like, and obviously we're dealing with strong momentum here, but you're also dealing from a long term, a lot of catching up to the chart. I mean, this has been a sentiment thing for years now. Movie theaters are dead, pandemic. You got a lot of catching up to do. I like IMAX, Greg. Whenever a company comes out and says we are doing robust business, I think you need to pay attention to what they're saying. I think there's a lot of room on the chart here. I think you're looking at 35% appreciation over the next 6 months, which is, once again, I think that's very, very reasonable, especially with the slate of movies there are. I love that resistance level. I like a long on IMAX here under the strength of catalyst, under the strength of momentum, under the shift in genuine sentiment that I am hearing out there everywhere. Like a target, I think you got a good 25%, 30% of price appreciation. Look to take some resistance or start selling calls near that resistance level. I think this is an easy one. Love movie theaters. Could go Cinemark. I like IMAX here. I think there's more catching up for it to do. And just going long right now. Worry about covering it at a later date.
All right. Thank you very much. Matt, you want to go next?
Yes, I always like following Mark. Let's go. Go ahead.
I was just
Say,
going to point.
I just had a tombstone moment. Say when.
The only thing I would say is I do remember
when.
IMAX coming up in another pick show called Trade Masters last week. So I guess we're just going to build on that. That's fine.
That's a good one.
Nothing wrong with that.
Listen, if it was good 3 days ago, it means it's good.
It's fair,
right?
It's fair. It's fair. I'm just taking
Trend
shots.
is the trend is your friend until it's
I'm
not,
taking
right?
butt shots. Yeah.
Okay.
All right, Matt. You're
Slightly overextended, but I get it.
Oh yeah, it's terrible. But
Yes.
that's how hot it is. If
I'll tell you though, Mark,
for,
the 9 EMA. Yeah, if you want to wait for just like a flag based on this one, I would love a flag.
Oh my gosh, would I love
20.
a pullback? Oh,
I
would love
a
any.
flag here.
By the way, Mark, your picks on Trade Masters last week were on point. I mean, they really were, and this was one of them. So anyway,
You're still getting beat with a club if you get killed. So don't even try.
All right, my turn. I obviously I kind of feel like there's a little bit of a theme developing, and again, I do not have the same philosophical viewpoint towards the theme building from an infrastructure perspective today as I did last year when I called that theme on. Oh man, it was election night, Tim, when I called that theme build. But I do see it beginning. I see the early beginnings of a theme emerging from an infrastructure perspective. Obviously, the economy reopening that is happening over the last 3 trading days, but I would say even more than that, Mark. IMAX has had a build-up for the last 2-3 weeks now of consistent price action. You've seen the same thing happen in other economic reopening plays, and so I'm looking at a sector here, and I'm saying, okay, what sector's tied to the theme that could develop with a positive solution to the debt situation? Everything we discussed today from a wall of worry perspective and eliminating that wall of worry over time, what could start emerging? I certainly want something tied to infrastructure. I want something tied, and whether that is, a still company like, say, Still Dynamics. And if you don't mind, Em, as I'm talking about some of these stocks, just kind of go with me on it. STLD, please. Whether you're talking about, a Still Dynamics, a Tackle 25 stock, or Cleveland Cliffs, CLF, you're looking at bottoming analysis there. I would like a little bit more time, though. I like Cleveland Cliffs at the 200-day moving average. I like Still Dynamics at the horizontal support, both showing reversal tendencies. I like that, right? But I do think we need a little bit more evidence, and maybe even to navigate the upcoming earnings reports in these two, because they can be extremely choppy and extremely volatile. I was looking at the airlines as well, and I think a lot of traders right now at Tackle Trading are looking at the airlines. And you got Jets out there. Jets was on our options report over the weekend. But if you're looking at an individual component, I was looking at American here, AAL. And again, when you're talking about trading, and I'm looking at trading here on AAL, when you're looking at that, I like the trigger above 22. I think the trigger above 22 right here makes a lot of sense. And yeah, Delta's been performing a little bit better than American, but it doesn't have a better technical setup where you could see, a drive from 22 to 24 in a fairly quick environment. You're really dealing with a little bit of a choppy, flag-based pattern, and, maybe come down a little bit. Whereas on American, it's like, I don't care what happens, just it's got to break 22. I like that analysis where it's like, I'm not waiting to navigate the choppy retracement or the flag. It can do whatever it wants. It can hang out. It can party. It can take a nap. It can go down. It can go up. It can go sideways. I don't care. It's got to break 22. I like that type of analysis. So I was looking at American there as well. I was looking, though, specifically at railroads, and it's something I was talking about last Friday in the halftime report. Brought it up with Coach Frank as well in Frank's charts. Talked a little bit about it yesterday as well. And I'm looking at those railroads right now, and you got a few of them out there, but I'm looking at Union Pacific, UNP today. Obviously, the railroads are going to be tied to any economic reopening. It's going to be tied to, and when I mean economic reopening, I'm not talking COVID data. I'm talking about economic reopening, the economy improving over time, transportation improving over time. Obviously, a $1.2 trillion infrastructure plan could have a really big kicker here for railroads as well. And when you're looking at all the different railroads out there, the one that to me had the clearest reversal type analysis was UNP, but you got a few of them out there as well. I like UNP more from a position style. I certainly see this technically as overextended, coming into some really, really big chop between really kind of that 213, 215 area. But once again, I'm looking at, for me, this is a little bit different. For new entry, I would be looking for a secondary pattern here, whether it's a high base or a flag coming back down to test 205. I do not like it from a directional perspective between 211 and 215. I think that's too tight of a range to justify the risk. However, looking at a secondary pattern here, maybe it's a high base that develops, maybe it's a flag that develops, but UNP on the radar, position style, fourth quarter, taking advantage of the infrastructure and a theme that could be emerging. And the last thing I'll say is put that on a weekly chart, and I think you're going to like the zone around 195. So again, not looking at 211 to 215, looking for a secondary pattern there.
All right.
thank you very much. Tim, you're up.
I love both of those ideas, by the way. They're really sound, good thesis behind them. And I'm going to try to add to that and add another one here and bring me up XLF if you can here, Emily. You know, so much of what's going to be happening over the next month is we're going to be waiting for clarity out of earnings season. One of the first groupings to get clarity out of earnings season will be the banks and the financial stocks because they report first. You know, volatility in the last quarter, rising interest rates. In fact, if you take a peek at TNX, this tracks the 10-year yield in the market. Banks tend to benefit in those environments. They also benefit when economy reopening themes start to develop as well, because they are part of those cyclical areas of the market. Interest rates have been going up. Okay. And if we go back to the financial sector, the companies that are best set to benefit from all of this stuff kind of coming together as we move through earnings season, in my opinion, may be the banks. And one thing I love about this chart, you can pick individual companies, you bet. There's a bunch of them out there that they're showing strength and performance right now. JP Morgan, Goldman Sachs, they're pushing towards highs, those types. Bank of America, Matt highlighted yesterday, pushing towards highs. I like the ETF. It avoids the earnings season risk. One of the things Coach Frank talks about so consistently in almost any time in any market is, I hate earnings season. I hate earnings season. I hate earnings season. You want to pull earnings volatility risk out of it, play something broad-based like an ETF around XLF. And if you look at the chart on XLF, it's dialing up a very, very clear entry about above $39. You know, 39.04 was the intraday tick there on that red candle about a month ago. But here we are, one time, two times, three times, four times, building it in. We're pushing against that resistance. A breakout, running it into the upside here makes a heck of a lot of sense to me. Liquidity is there if you ever want to do anything with the options market. These are penny spreads in the options market. It is an ETF that we're watching and keep in bullish territory. It's one of our top rated ETFs. Simple trade here, Emily. Breakout above 39. You ride it to the upside, and then you figure out what to do with what you want to do with it once you reach T1 or T2. I can map those things out in my head. XLF, with the rising interest rate environment, with the cyclical areas, the market improving, and with bank earnings right in front of us, and my expectation is they're going to come in and crush it just like they did in July, I think you could see some juice here with XLF. It is my pick for the Queen's Court today.
Okay. All right. So going back to IMAX with Coach Mark. Again, Mark always brings, areas of the market that I, either have no interest in or really didn't even think about them. And he's been, spot on with, with the reopening theme. And, you've nailed Cinemark's forever and ever and ever. And so here's another one here with IMAX, which I don't even think I've ever traded IMAX, but love the pattern. Like we talked about, it's a little bit overextended, but there is room for it to continue to go up. I love it even more on the weekly, where you can see what that overhead resistance is. And once it clears this choppiness here, there's, it can, very easily get to that resistance level there. So I love it on a long-term play, which is what you were alluding to with a directional play on that. So I like this for, again, just an area of the market that I really don't have a lot of exposure to. I just really just do, companies that I like, know, and trust. So when if that's something I'm not aware of, I'm not even going to consider it. But you always seem to bring some things that I would like, no, I'm not interested. But then the way you give your thesis, and you've talked about that, talked about this for quite some time. I really like this. For me, it's a little bit overextended. I would, like we said, we would like a pullback or a high bid on it there. That 9, and this is your girlfriend, it's a little bit far away from the 9. So we would want to see it, that 9 catch up to where the price is right now, either through a high base or a pullback. But absolutely love it either way. It is an inexpensive stock. You can just go and buy out the shares outright and start to do cover calls on that once it settles down. But I think for now it's pretty nice move here that we have on IMAX. So I like that one. Then we have the railroads and industrials. And yesterday in the lab, and I'll bring up XLI here, but in our lab yesterday, we talked about, this being the third the fourth quarter of the year. And we were having a conversation of, what if you'd had some capital that, you had allocated and you have not spent yet, maybe you had a playbook or design where, you were putting in a certain dollar amount every quarter. And, this is the final quarter. Where do you put the money? Which area of the market do you have an interest in? And we kind of went through and looked for sectors that areas in the market where they were beat up a little bit, that were below the 20, below the 50, but above the 200. And we started coming up with an idea of a plan of, what do you do once support is formed, once you see the support has formed, and if it's at the 200, even better. What we're looking at, and there was a lot of things that were in the middle, very choppy. They haven't really identified that level of support, like with financials. So when we look at financials, we were looking at this area and going, not financials, but technology, actually. We were looking at technology going, okay, we're in the middle of nowhere. We haven't formed support yet. We're that distance away from the 200, but it's not a bad time for you to start having a plan of what you're going to do when support is formed in technology. And that's an area that you have interest in. Which stocks are you going to start to look into to add to your portfolio, if that is a plan that you have for you? So we went through and looked at a couple of sectors. But we did not look at XLI because my area of interest was in technology, as it's still trying to form a level of support, looking into stuff there. But really like this area as well, because it has formed that support level at the 200-day moving average. You've gotten that nice confirmation candle here today. So you can literally go scan and find, stocks that are in this industry. And UNP is one of those, right? So you've got earnings coming up here and about on the 21st, but Matt, you're looking at a long-term, position trade on UNP. Mm-hmm. I would prefer to, like you said, either have, clear all this resistance stuff over here and then take it for a ride there. So I do like that. And again, that's just something that I would put on my watch list, because that would be an area, if this was an area that I'm interested in adding exposure, or have been looking to get into positions here that and haven't yet, and it's the fourth quarter, where do you execute whatever capital you have? So that's a pretty nice one there. And then we have financials. With earnings coming up next week, or actually, yeah, it is next week. They start next. They start next. This is, an option that you could do in turn, rather than playing the individual stocks, is looking at the ETF. And again, just waiting for the breakout. Nice, easy pattern. I like easy and simple. I don't like, complicated stuff. This is clear. You can see how many times it's tried to break out of this 39 zone. And once it clears that, that's a go. With earnings season, again, we don't know what the stocks are going to do, but like we talked about with the 10-year yield, that, that is a potential for those stocks to do well during earnings seasons. But for me, it's going to be like, I want to kind of wait and see. And I already have exposure in financials, so I'm really not looking to add anything more. And I already have a plan for the stocks that I own individually. And like, Tim talked about, you can go individual stocks, but if you do not have, if you want to avoid the whole earnings noise like Coach Frank does, the ETF is the way to go. So I really like all three areas. I like all three picks, and also in the strategies, behind them. So IMAX is long directional. UNP is position trade, and then XLF is, based off of the breakout. So really, all three really great ones, but I gotta chop somebody's head off. And I don't know who.
Dang clan.
I can help.
Listen.
I'll give you honest advice if you want. You know me, I will always give honest advice.
You're not helping with my fantasy football. That's where I need your honest advice is in fantasy football.
My honest advice to you was the exact same advice I gave to myself, and I'm 1-3. So, so it was honest advice. It was just really bad advice. That's it. I think the breakout in finance is very clean. And I do think you got to respect that it's held up in the face of some of this volatility. Finance can be caught up in the same type of storylines, and it just didn't. And so I do think you got to be fairly impressed by that, especially with those banks, KRE with the regional banks and the major banks. And I do know they're reporting next week, and that certainly can create an increasing volatility condition. That's why XLF instead of, Bank of America or Wells Fargo or something like that, you take the more diversified approach. And again, you couple that with the breakout, right? You're not playing underneath 39, you're playing above 39. So you're waiting for that positive catalyst type environment. When you're looking at IMAX fits a very, very consistent theme in the market right now, and it's a theme that could have some legs. As we're all, I think, impressed by the attendance at movie theaters and the potential revenue streams that could come to IMAX, AMC, Cinemark, and then obviously the content providers like Disney and Paramount and so on and so forth. So I think that's been very impressive over the course of the last few weeks, and the momentum is honestly, it's increasing, not decreasing right now. And so I certainly think you could have some consistency. The UNP one, it's nasty at resistance. It is, and it's going to be a fairly difficult one. It's more of a theme, it's more of a fundamental approach, and it's more like navigating with covered calls until we do see that breakout of that 200-day moving average. And you can kind of see the IMAX scenario, right? Where you have a 3-week build that is consistent, where you can just start swing trading momentum and stuff like that. This is more the beginnings of a reversal scenario. And so you're really looking at UNP like you looked at IMAX 3 weeks ago, where it was just building. Now, obviously, we got the last 3 weeks of IMAX be like, yeah, that was very consistent. And if UNP can do that, that's beautiful and that's fantastic. But that's an if. IMAX has already achieved it. And so it for me, it's probably, honestly, it's let me fall on my sword moment and take the L on, because I do think it's a little bit more difficult given the fact that you're approaching earnings and you're approaching some key levels of resistance. I think it's much cleaner with the momentum of IMAX, and I think it's much cleaner above 39 on finance.
I'm so proud of you.
I tell you, honest advice. I'm
still beating Tim down. I don't care.
I think
Tim, as always, did refer to me as Emily during Queen's Court.
So let's just kill Tim.
Let's just kill Tim.
Not on the technical analysis, not on the pick, but just for Tim being Tim.
I survived Tim. Somehow I survived.
Emily,
somehow I said kill me, and Emily's like, no, I'm going to kill Tim.
Let me give you some honest advice. Let's just kill Tim.
Mark, go listen to Wu-Tang Clan.
And I cannot let it go that he beat me on fantasy football. So there's no way I'm letting you survive on Queen's Court after you.
All right. That's fair. That's fair. It was a close. It was a really close game.
Team tackle.
Personal reason.
There is no subjective analysis in when we killed anybody in Queen's Court. None whatsoever.
No. We're down the barrel. That's fine.
So we take it personal.
It's just math. His name starts with T.
Listen, I like the UNP idea. I like the industrial theme. I think it's a great watch this candidate, and I think there's a lot going on there. So I appreciated everybody's thoughts here on the Queen's Court. And if I get floated, but the team out there gets good analysis, I'm fine with that as well.
I've scoreboard in the UNP one a little bit.
Yeah.
Reminding the coaches of tackle trading a little bit.
Just kind of, dude, it's got a nice little W breakout that was developing. We were looking at that yesterday, and it did confirm here today. So yeah, pushing the 200 needs a little development there, but all in all, I love the little segment here, guys. Analysis. All right, Emily, very good. Let's start moving into the end of our show here, guys, and start getting final thoughts back on the S&P 500 for a minute here, Em, if we can. Emily, while you got the screen, give us your final thoughts for the team out there.
Final thoughts is, what I talked about yesterday in the lab. It's third quarter, and if you have some capital that you have yet to deploy from your trading plan or however it is that you have your playbook designed, be strategic about it. Just because we're at these levels where a lot of stocks have gotten beat up doesn't mean that that's the end of it. There could still be some more downtrend. So it's having a plan of how you're going to start getting into those long-term positions if that is a plan that you have. So just, always be prepared. Just know what to do.
Gotcha. Very good. Mark, final thoughts from you.
Coaches
And-
show tonight, 8:30 Eastern. Coaches are always topical. We always try to make our coaches show for our pro members a topic that is educational, but can apply to the current market conditions, right? And so, I wouldn't be surprised if we talk a little bit about potential bearish retracements and bearish stop outs and, trying to analyze the pattern, because the pattern is king right now. The pattern is king right now.
Absolutely. Matt, final thoughts for the team.
Final thoughts, coaches show later on tonight. You guys already discussed that. You also have the podcast that was released yesterday. Definitely check out the podcast, and then give Tim a like and share on that video as well. He did a wonderful job, and I do believe you're going to re-record that video as well to update, because we're going to be updating some of those timeless content pieces we like at Tackle Trading, the daily routine, the start with why, things like that over the next couple weeks. So definitely check out Start with Why, listen to the podcast. And if you want to support the podcast, the number one best way, there's not even a close second, 5-star reviews on iTunes. And if you don't like the pod, we love you, 5-star review on iTunes.
Yep. I appreciate that, Matt. Podcast, I dropped the link earlier. You can find it on tradingjustice.com as well. And my last thought here, guys, is if you want to be a part of those coaches shows, you want to be a part of the back end of what we're doing, we've got a 15-day trial to the pro membership in every one of our YouTube videos at the bottom and in the description. Come and join us and make sure that you attend our webinars in the evenings. Until then, though, we will be back tomorrow, same time, same station. Coach Tyler will be joining us, and we'll be breaking these markets down one step at a time again. Have a wonderful